Hi everyone, welcome back to YouTube videos. And today I have a very interesting observation which I wanted to put across for Dow Jones Industrials Average. You call it as Dow Jones Indu as well. So I've marked two charts, particularly Dow Jones Industrials Average as well as the Dow Jones Transportation Average. And whether the indicator or whether the chart pattern which I'm discussing today indicates that whether in this index will be third time lucky. We'll see. What this third time lucky actually does mean across for this coveted index. So the first slide is where we look at the Dow Jones Industrials Average, and I'm concentrating particularly on this 2020 rally. Where you saw in the markets or the index specifically bottoming out at 18,500 levels, rallying it up to almost as much as 29,000 plus. Now let's look at the detailed part of this rally. Now, the two shaded regions are the most important portions over here. So as you can see, that there is this pattern of a head and shoulder. So this is the head portion. This is the shoulder portion, the left shoulder. This is the head portion for the price pattern, and this is the right shoulder which is getting formed. Now, over the span of this one and a half odd months, start from April 2020 right till May mid 2020, the Dow Jones Industrials Average actually formed a bearish head and shoulder pattern. Now, the idea with this bearish head and shoulder pattern is it's generally called as a reversal pattern if these patterns give a confirmation of a breakdown. Now, this attempt was the formation of the bearish head and shoulder pattern actually did not result into a breakdown because the index did not fall below this major support trend line or the neckline, what is famously called, of this head and shoulder pattern. Fortunately, for the Dow Jones Industrials Average, this was actually bottom two, and you saw the index breaking past above this bearish pattern and starting a new trend for itself. Then there was the second bearish head and shoulder pattern which is getting formed. As you can see, this is the left shoulder, which is a slightly contracted or a shorter shoulder for the Dow Jones Industrials Average. Then formed a big prolonged head as well as a big prolonged, or slight bit more, extended right shoulder for the Dow Jones Industrials Average. Yet again, even on the charts, on the short-term charts, as you can see, that the Dow Jones Industrials Average did not break below this, bearish head and shoulder pattern yet again. So the second time where the index failed to confirm or complete this bearish head and shoulder pattern, and it resulted into the index going into a rally. But this time around, the rally was more I would say gradual and more slow because it took a lot of time for the Dow Jones Industrials Average to try and break past above this previous head and then start a new trend for itself. This is the third attempt towards forming a similar kind of a pattern, which is why I have termed it as whether the Dow Jones will be third time lucky or not. Now, as you can see on the charts over here, this is the left shoulder, this is the head of the head and shoulder pattern, and this is the right shoulder for the head and shoulder pattern for Dow Jones. Now, 27,500 is the level, which is the most important level for Dow Jones Industrials Average. Now, the idea over here is, so this is the support trend line for the, Dow Jones Industrials Average. But where does the support trend line comes across from? As you can see, the head of the bearish pattern actually becomes, so this was an earlier resistance. When you see a bearish head and shoulder getting formed, this portion actually becomes a resistance trend line. Now, once the resistance trend line is broken, it changes its behavior and it forms a support trend line. So you see a break of this, bearish, see a break of this, resistance over here. And the moment this resistance is broken, it now starts to act as major support level. So as you can see, this the index takes support over here, bounces back, rallies, corrects over here. It takes marginal support over here, bounces back, and third time again we the index takes supports, and we tend to see a continuation of the rally. Same happened with this time around as well. So the head and shoulder pattern getting formed over here, as you can see, that this resistance line, which you can see on the Dow Jones, actually now formed as a support trend line for the Dow Jones, which is why this is a very important neckline for the pattern. Now, this is a very important pattern. So it's not just a plain simple head and shoulder pattern which is important over here. It's a combination of head and shoulder pattern as well as the demand and the supply zones for the Dow Jones Industrial Average. Now, what could probably happen is if the Dow Jones confirms a break, and at least it needs 2 or 3 days of consecutive selling below this, below this head and shoulder pattern. So if you see a breakdown below this head and shoulder pattern for at least 2 3 days, that's a confirmation that there would be a trend reversal for the Dow Jones Industrials Average, and this resistance or the support trend line now could probably now act as more of a resistance trend line. So this is a very, very important zone, very important level for Dow Jones. That's at 27,500 mark, plus or minus 100 odd points to keep it as a buffer for intraday choppiness or intraday volatility. Now let's look at the other way to look at the Dow Jones Industrials Average. Now this is the same Dow Jones price chart on the lower grid. The upper grid is the RSI, which is famously known as Relative Strength Index. Now look at the behavior of RSI right from the March bottom, right from the March 23rd, 24th bottom for the US major. You can see that there has been a behavior perspective for the Dow Jones where the RSI actually took support every time it tried to correct and come back to that 40 odd levels. So around 39.5 or 40 odd zone is the major support zone for RSI, for the Dow Jones. So this is a typical sign of a trending behavior. So every trend generally categorized has a certain set of behavior. If the behavior of the trend changes, eventually the trend will also change or reverse. So Dow Jones Industrials Average is again very, very close towards testing this trend line again. So the last time we tested this trend line was over here, which was a completion of a bearish initial pattern. As you can, if you can probably relook at the previous charts as well, this was a bearish head and shoulder pattern getting formed. We tried to test the neckline again, and the Dow Jones Industrials Average actually took support at this 40 odd mark, managed to bounce back. So again, this is the third time where we are trying to test this major support line. So which is why I believe that this could be a very, very important level. The next couple of days could probably be very interesting and intriguing for the markets because a change of behavior could actually lead to a change of this pattern of the indices going towards a pattern of higher highs and actually trying to reverse the trend. Let's look at some other chart patterns which have very strong correlated impact with respect to Dow Jones Industrials Average. And I'm looking at the Dow Jones Transportation Average, which according to Dow theory generally moves in tandem, especially in terms of strong bull market cases. Now, as you can see over here, Dow Jones Transportation Average surprisingly has been an outperformer as compared to a Dow Jones Industrials Average. Now, here's the reason why. You can look at the price pattern over here. The prices are forming, a significant degree of upward trending motion. The RSI, which is the upper grid over here, as you can see, the RSI, the earlier start of the trend actually started off with the RSI taking support at 40. So from March end, approximately, or the 23rd of March, when the Dow Jones Transportation also formed a bottom, till somewhere in the end of June and start of July, the RSI behavior for Dow Jones Transportation Average was to try and take support at this 40 odd level. Now, the moment there was a change of behavior, as you can see in this rally, there is a change of behavior. Now, the major support of RSI has actually shifted and is now becoming a support at the 50 level. So, this is completely different than what the Dow Jones Industrial Average is showing. It indicates that Dow Jones Transportation Average is a more stronger index. So, trying to break the stronger index would require all the more stronger force. So, a confirmation of a break of this 50 mark first, which I believe is a minor support, but the major support of 40 level of RSI for the Dow Jones Transportation Average could be the leading indicator. So rather than just looking at the Dow Jones Industrials Average over here, what is very, very important to actually take note of is Dow Jones Transportation Average, and whether the Dow Jones Transportation Average would break not just the 50 support level or the floor level for RSI, which I believe is a minor support, but whether the Dow Jones Industrials as well as Dow Jones Transportation Average, they both try and break this RSI level of 40. This, I believe, is a very, very important indicator and a signal to watch out for. As you can see on the prices as well, right from the March lows, the Dow Jones Transportation Average has been trying to adhere and stick to this trend line support. So even this trend line support is getting tested. So a break of this RSI, a possible break of this RSI 40 as well, could lead to a sharp correction in the Dow Jones Transportation Average, which could potentially lead to a reversal of sorts, at least in the near term to medium term charts on both these key indices. So these are very, very important chart patterns, very important observations to try and take note of. It's not just a plain head and shoulder pattern which everyone is focusing upon. it's very important to understand the behavior, understand the rationale, understand the sentiment, understand the demand and supply forces whenever you look at such kind of chart patterns, and you try and look at it on a much larger scale, a larger picture, rather than just concentrating on one solidarity or one single pattern in the entire scheme of things. So this is what I wanted to bring across to you guys, for your understanding, for your deeper understanding. You can see over here that the RSIs has also started to form divergences of sorts for the Dow Jones Transportation Average. So this is also a very important key, a very important signal over here. You can see the RSI actually making a top over here. The RSI making a pattern of lower highs and lower lows, and the prices are actually forming a pattern of higher highs and higher lows. Now, this is generally and typically a sign of bearish divergences where the RSIs are actually giving you a first-hand impression or first-hand understanding that there is a deceleration which has started, and the deceleration would eventually lead into a corrective phase on the prices as well. So both on the RSI front as well as on the price front, and of course the behavior of RSIs, the support levels for RSIs as well as the divergences on RSIs are very, very strong and interesting observations for both the Dow Jones and the Transportation Average. So in a nutshell, what we summarized today is that there is a bearish head and shoulder pattern formation which has happened in the Dow Jones Industrials Average. The breakdown level is 27,500, and at least we need in a couple of days of confirmation below, and there has to be negative or red candlestick formations which have to happen for Dow Jones Industrials Average to try and give you a confirmation. So one solidarity or one solid a breakdown of pattern you could not result into a sell signal. You need confirmation of at least 2-3 days where the prices make successive new lows, even on short-term charts, for us to try and call it as a big reversal on the Dow Jones Industrials Average. The last two attempts of a bearish pattern actually failed, and it resulted into a big rally as well. So the question which you are asking is, well, the Dow Jones Industrials Average be third time lucky, whether this would just be a one-off sell-off for the Dow Jones, and this could probably result into buying forces and buying demand coming back again. Will the rally continue for Dow Jones Industrials Average, or will the uptrend resume? So I think over the next couple of days, the idea would be very, very clear. That how the Dow Jones Industrials Average is actually likely to shape, and I for one believe that that could be very, very important to take note of. So this is what I wanted to bring across to all of you guys. Hope you guys enjoyed the presentation. Do ensure that you like and subscribe the channel on YouTube for more such interesting videos. I'll try and throw in as much of interesting analysis to all of you guys as much I can on a regular basis. Thank you so much for connecting. Have a great day. Stay safe. Stay healthy. Thank you.